Banks in Singapore have started trimming interest rates on some of their home loans. This comes ahead of an expected rate cut by the U.S. Federal Reserve as early as next month. Tan Se Hui with more.
Economists are keeping a close watch on the U.S. Federal Reserve's next move. While the rate was unchanged in its last policy meeting, the Fed also indicated a rate cut was on the cards.
Definitely we're seeing the market right now pricing in expectations for at least 2 rate cuts by the end of the year. In fact, but for right now, 25 basis points, that's the expectation as of July.
The move, if made, will bring cheer from homeowners looking to refinance or those taking a new home loan. That's because any Fed rate cut would impact the Singapore Interbank Offered Rate, or SIBOR. Banks in Singapore use SIBOR as a benchmark rate for home loans with a floating interest rate. The 3-month SIBOR is currently at 2%.
The banks have already reduced their fixed rates today in the market. So the spreads between a fixed interest rate and a floating interest rate is as narrow as 0.15%, so 10 to 15 basis points. So we have seen the reduction already. So definitely moving forward, interest rates might come down a little bit. It really depends on how the market plays out, how the trade war with US and China plays out.
According to data compiled by mortgage advisory firm Redbrick, interest rates have dropped for 2-year fixed-rate home loans offered by UOB, Maybank, Citibank and OCBC from 2.68 to 2.28%.
Home loans customers over here will enjoy a drop in the rates if they are based and pegged against the SIBOR index itself. However, the fact is that not all customers are pegged to the SIBOR. Most customers over the last 3 to 4 years, they have actually pegged their housing loan rates against the bank's fixed deposit rate or an internal board rate index itself.
Some economists believe the Fed may cut rates more than once this year, leading to further declines in SIBOR. The upcoming G20 meeting in Japan could also impact the Fed's decision.
A stalemate or even deterioration in the trade talks ending up in the further tariffs, I think that itself could see the Fed coming through more urgently with this insurance cuts of sorts, so that in that sense could see lower rates coming through.
While rates are expected to drop, analysts say it will not drive housing loan demand. However, homeowners will benefit from cheaper loans, which means a lower monthly installment. Experts say it is typical for a refinancing process to take at least 3 months to complete. The timing may be just right for homeowners to start shopping around for the best rates offered by banks.